Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today it's election day. Go out and do your civic duty and make your vote count. It is our right, but in some other jurisdictions, it is a privilege that is difficult to come by. So do your duty and make your vote. Energy. It is the lifeblood, the economic lifeblood of our nation. And there are only two ways that you can participate directly over the Trinidad and Tobago Stock Exchange. That is through TTNGL as well as NEL, National Enterprises Limited. And I wanted to talk a little bit today, in a lengthened fashion I would say, about these two companies, how they are performing and how they reflect what is happening to our energy sector in general. So let's start by talking a bit about NGL. And you will see the results of the company over the last 9 months or so. And what is happening? You are seeing from 2015 to 2016 a decline in the share of profit that is taking place. From 2015, you are seeing the profit for the period 130 million down to 115, and earnings per share 85 cents down to 75 cents in terms of TTNGL. Trailing, that is the last 4 quarters, $1.50. And this in a sense reflects what is happening generally in terms of prices as well as volume. Of course, TTNGL reflects totally its holding, or 39% or so holding, of PPGPL. And PPGPL is that company that produces natural gas, propane, and butane, as you would see on the screen. And you would see also what has happened in terms of these commodity prices that this company produces. A significant fall from 2014 down to 2015, 2016, but some element of stabilization in terms of the three products, which is natural gasoline, propane, and butane. But as you can see how significant that fall is to 215, 111, 91 cents in the case of natural gasoline. And the similar story across the board for the 9-month period. So what has been happening this year as opposed to the last 3 years? As I said, some level of stabilization and improvement in terms of the results. You would see at the beginning of the year, 92 cents for natural gasoline, up to $1.06, 59 cents for butane, up to 71 cents, and 40 cents for propane, up to 54 cents. So there is some price stabilization as far as that goes, as well as, let's see what is happening now with volume. Volume by price equal value. And what we are seeing is the total exports of PPGPL over the period from the first quarter 2015 out to the third quarter 2016. What are you seeing? You are seeing a decline in the volume of exports. All the way down this top right graph in yellow on your screen, that's what you are seeing. And then you are seeing as well the prices that we have spoken about over the period to first quarter 2015 out to third quarter 2016. As I said, some level of stabilization. So our outlook for TTNGL is we have a buy recommendation on the stock, and the buy recommendation is essentially based on the fact that we expect more volume of natural gas, which feeds into the business of PPGPL, which feeds into the business of TTNGL. Increased volume, one cannot say what is going to happen with price. Increased volume, Juniper, Sircan, the truck, all of those projects that are supposed to come and bring us back to previous levels in 2017, 2018, despite the significant decline that we have had in the production of natural gas in the past 3 years or so. Let's look at NEL, the other energy player. Significant part of the overall production, overall revenues of NEL is in energy. Ammonia, NGL, and natural gas, liquids as well. So let's look at what has been happening in the 6-month period ended September 30th. Decline in revenue, again, as a result of the energy basket. Share of profits declined from 143 to 138. Profit for the period, 174 to 162. Earnings per share, 28 cents in 2015 for the 6-month period, 25 cents as we look now. So some decline. Now the price is trading at 10.59 and the question is what to do. As I said, we have a buy recommendation for TTNGL. The main drivers of National Enterprises Limited are, of course, TTLNG, NGC NGL, and Tringen, of which the company holds certain proportion of holdings. I look very quickly at this. The main drivers are natural gas, NGL, LNG, and Tringen, as you see in the color code here, and falling at the last audited period very significantly down to $65 million. Dividends as well, the main players are, when you look at the barcode, NGL, LNG, and Tringen. Let's look at what is happening with volume and prices for these three various areas. Prices, notably. In 2012, $526 US per ton, now $254. So prices have declined significantly and have continued to do so in the last 3 years, as you would see, from 475, 428, and 254. What has been happening to LNG? Again, the same trend in the last 3 years. And so that this year, what you will see is in terms of volume production is down 2.7% decline, 0.8% and 17% decline. And what's happening with prices? Well, the Henry Hub price, that is the wellhead price in the US, 307. But as we go further out, and LNG from Trinidad and Tobago is imported further out into Europe, South America, Asia, and you would see that the prices are higher in these regions, and the proportion of sales to these regions are much higher than what is sold to the US. And this is the Henry Hub price improving this year, and this is a good indicator of what could happen. But the main drag is the volume production. Prices going up this year, but production falling. We have a neutral on NEL because of the fact that volumes remain low and prices remain low in this area where 55% of the revenues of NEL come from ammonia historically over the past 5 years, 20% from LNG and NGL. Have yourself a wonderful week in terms of investment. You'll hear from me a little bit later. This is Subhash Ram Kelawan for the Bourse Report.